Hi, everyone. Welcome to another episode of Relax, I Got This. And today we're going to talk about the one thing that keeps a lot of people from even thinking that they can purchase a home, and that is their credit and their credit score. So make sure you stay tuned. We've got Justin Mirche, and he's going to tell us about a mortgage score.
A real estate transaction is potentially the largest investment we make in our lives. Whether you're buying and selling your personal home or investing in real estate, you need the knowledge to make the right decisions. Get ready. Robin is a Texas realtor and has the experience to give you the information you need to make the right decisions. Welcome to Relax, I Got This with your host, Robin McCoy.
Hey, everybody. Robin McCoy, a Texas realtor, and welcome to another episode of Relax, I Got This. And today is the topic we've all need to talk about, but nobody wants to, and that's about your credit. And so we have the credit expert, Justin Mirche, here with us today, and he is going to just give us the facts and what's important and how to manage this, how to fix it if it's broken, and what we need to do to look at. Justin is the founder and president of Creative Credit Solutions, the credit restoration experts. He has a vast background in finance and has been the go-to person for friends, colleagues, and clients for years to assist in solving a wide array of credit and finance challenges. His experience and dedication has truly transformed lives. Welcome to the show.
Thank you, Robin. Thank you so much.
So this is, you're the guy, right? Nobody wants to talk to you, but so many people need to.
Right. I mean, essentially, yes. I mean, that's kind of the way it works. People when they're having credit issues, especially if they've come from a place where they've had really good credit or they have a family that has warned them about debt their whole lives, they tend to be pretty coy about it. They play on your last name. So the timing has to be right for them to want to deal with it because it's a lot to deal with. You've got to face some old skeletons in most cases. You've got to be willing to do some things that are uncomfortable, and that timing looks different for really everybody. Everybody kind of has their spot. A lot of times it's when they're trying to buy a home. A lot of people bury their head in the sand until they're ready to buy. And then that fire is lit. And now they're like, okay, I'm willing to do whatever it takes. Let's, because they saw the house that they wanted because you showed it to them.
Yeah.
And now they're just on fire.
Like,
okay, let's do
it. I got to do this. Well,
Right.
And I think that's part of it too, because that's one of the things when I ask people, why aren't you buying a house? I mean, obviously with the cost of rent these days, let's say the cost of real estate, but the cost of rent is as much or more than the mortgage on a house. And I go, yeah, I've got to work on my credit. How many people, what's the percentage of Americans that need to work on their credit?
I mean, the market's huge. And it's an underserved market also, so the market is gigantic. I don't know what the percentage is, but I know that there's not enough companies to deal with the amount of people that actually need the help. Right.
Yeah.
And then there's a lot of different types of companies in this space. We are geared more towards the mortgage industry. And that's a whole different thing than if you're just kind of general credit repair or, some companies are just kind of like they throw disputes at the bureaus and hope it works out, so we're definitely more calculated than that. So really, I don't know what it looks like, but speaking to kind of what you're talking about with the person who's renting, when I talk to a client who's spending $2,700, $2,300 a month in rent, or even $1,800 to $2,000. I'm like, man, you don't realize, first of all, the kind of money that you're losing by not investing in yourself. But also, a lot of people kind of want to say, well, my credit's not the best. And I'm like, well, it might be. You'd be surprised how easy it is to get into a home.
Yeah.
You'd be surprised how little it takes to actually get to the bottom threshold for FHA loans. But also, if you're throwing away, $1,800, $2,000 a month, there's really never been a better time. I don't care what rates look like. I don't care what the property values look like if it's affordable. Even a townhome. Or one of the biggest mistakes I made was I didn't buy until I was like mid 30s. I should have bought late 20s, early 30s. I was living off of Mockingbird and 75. I was renting, and I had I was in the process of buying. Ended up getting married. Long story. Moving to 40 Texas, but at that time, I was looking at buying a townhome in Uptown, and it was like $130,000.
Wow.
Yeah, which is now like,
Wow.
$700,000.
Yeah. Yeah.
Or $1 million, right?
Yeah.
So,
Wow.
had I moved, back then, that would have been, amazing. I could have,
Yeah.
rented it out and, just
Woulda, coulda, shoulda, right? I
right. Well, and
mean,
it's always like that with
yeah.
in the mortgage industry. It's always woulda, coulda, shoulda, right? It's always like it's not the right time. I'm like, but next year's not going to be the right time either.
Right.
I mean,
And especially if you don't address the things that you say it's not the right time. I've got credit card debt. I've got a car loan. I've got student loans that I've been putting off for years. I just can't do it.
Well, yeah, but you can though, because you're paying $2,000 a month in rent.
Exactly.
You can just replace that, get you some down payment assistance.
We can
save up
figure
to
some things
$2,000
out, right?
Right. Yeah. You're paying, $2,700 to live off of, to live downtown, for a 1 or 2 bedroom. You could easily replace that with a condo or a townhome or something, and pay less, like you were talking about. So,
well, when it comes to, credit or credit repair so that I can buy a house, right? I know I've got some things. What's the myth that most people think versus the reality of how they can make this happen maybe even sooner than they think? Because I think some people think they have to have zero debt.
To buy a home?
Yeah.
Yeah. So I think the biggest myth, and it still exists. I know it certainly did when I bought a home, and it wasn't true. That you need 20% down.
Right.
And that the requirements are super stringent and difficult. And the reality, that's just not the case. There's, first of all, to address the requirement issue, a lot of people don't realize that FHA is actually, it's a soft program. They try to get as many people into that program as possible, as little as, 580, if you have a lot of money down, 620, 640 on the mortgage score side of things, will get you into an FHA loan. And they're like, well, I don't want FHA, I want conventional. I'm like, well, I mean,
let's start. You got to start somewhere, right?
Exactly. Right. And, FHA is not as pretty as it used to be. I mean, I got my first loan was an FHA and the PMI drops off, after you hit that 20%. That no longer is the case. You have to refinance out of it to a conventional product. But so people think, that it's really hard to get a loan, and it's not. I mean, you'd be surprised what I see on my side. If we've got a compliant client that is willing to do what's necessary, we can get just about anybody to the finish line. Ultimately, there's a lot of factors involved in that. Sometimes we need to restructure debt. A lot of times we have to reestablish credit. Sometimes we have to settle some items. Some items are just not legal that are on their credit profile. Yeah. Usually that's like 20 to 25% of the items on their credit in general. Yeah. So about, 20 to 25% in general, we're probably going to pluck off anyways, based on this idea that it doesn't meet the legal requirements to be there. And there's a lot of different metrics that we look at, the mechanics of the count. The Fair Credit Reporting Act says it has to be 100% accurate to be on their credit. It has to be consistent between all 3 bureaus, So the one thing that I know is that the credit bureaus aren't very good at being credit bureaus. They're not very good databases, right?
Yeah.
They don't really take care of the data very well. They don't secure it for us. They're just kind of a mess, right? So, we didn't make the laws. The laws are there for the consumer. So, but that in and of itself usually doesn't do the trick, right? So usually you've got to combine that with a lot of other activities to get their scores up on the mortgage score side of things, because the mortgage score is a different algorithm. It's not the same algorithm as, what you see on Credit Karma, or even what you see as a credit card. Deal. Yeah. Even what you see as a credit card company that gives you a score, most of the time the clients are going to look at scores that are not going to be even close to what their mortgage score is. Usually, this isn't always true. This is not a direct kind of equivalent, but what I see mostly is that, clients will pull a 20 to 40 point lower score than what they think they have on the mortgage score side of things. And the reason is because the mortgage score is a very specific subset of FICO. It's called FICO 2, 4, and 5. It's a 20-year-old algorithm. It's been around forever. And hasn't changed since inception, right? So back in the late 1990s, early 2000s is when the mortgage score came about, and a lot's changed in 20 plus years, right? Yeah. But not the mortgage score, So It's got some good things that I like about it that help that we can optimize and take advantage of because it hasn't caught up to the newer algorithms. And then it's got some things that are, in my opinion, are really difficult to deal with. As an example, you can have perfect credit, and get a little $30 collection on your credit profile because you went to the doctor, they sent off lab work, you thought your insurance covered it, they didn't, now you got a $30 lab, that'll take somebody from, a 7, if they have perfect credit, 740, 750, all the way down to like under a 700.
Wow.
On the mortgage score side of things.
Yeah.
Now your newer scoring algorithms discount that kind of stuff,
Sure.
right? Now, on the flip side of that, the mortgage score is kind of fun to work with because it hasn't caught up to some of the things that you can do to actually optimize those scores in the other direction, right? So there's a lot that you can do to really get the score to move in the other direction that doesn't work for FICO 8, FICO 9, and now FICO 10 with trended data that just came out. So it's a double-edged sword, but it's different because the clients aren't going to be able to, they're not going to be able to research, well, how does this work? They're going to get all the current information. And
right.
We're still working in a credit scoring environment that is archaic.
It's old. It's just
very
old. It's just old.
Yeah, and it's supposed to be changing. So there's legislation right now, or actually there's legislation that passed through Congress last year to give the mortgage industry kind of a facelift when it comes to credit scoring. Not sure how I feel about it.
Wait and see how that all plays out once in reality.
Right. Well, there is the Vantage score, right? There's FICO. Those are the two main scoring algorithms. There used to be a lot of different scoring algorithms. There was informational and educational scores. There's just scores everywhere, right?
Right.
And then, these websites started getting sued by the government because they're like, hey, you're representing a fake score to get people to your website. Experian was actually one of them. They had an informational score that they got sued on. So now there's really just two. There's Vantage score and there's FICO. FICO has a monopoly on the mortgage industry. We don't like monopolies in the States, right. So I agree they do have a monopoly on it, but Vantage score, which is the competing score, which you see for free everywhere, Credit Karma, Credit Sesame, because they give it away for free because they're trying to compete with FICO. FICO is not giving their score away for free. But so there's been lobbyists and there's been a lot of push to get this competing credit score out there. Now, behind that, the truth is that Vantage score was created by the credit bureaus because they didn't want to pay FICO for the score anymore. So I know this sounds too conspiracy to be true,
but it really does. It sounds like a lot of shenanigans to me.
Yeah. So you've got the credit bureaus who created this separate company that created Vantage score, all three of them together, because they compete with each other, but now they're together, right? And that's why there's been this big, push for Vantage score over the last decade. They've got lobbying power. Now they've got the, Congress to change that up. So, I think, yes, it's good to have competition. But the way this is going down for me is kind of like more credit bureau nonsense.
Yeah. Well, so see how confusing all this is just by what you said, and the credit bureaus and Congress and what's a FICO and, what is all this stuff? No wonder the consumer is completely confused. And I applied for credit cards. I didn't get a credit card, so I must have bad credit, or whatever reason they think they have a problem, or they think everything's great. And then they go to get a loan and they're like, all right, we got some work to do.
Because they've been focusing on Credit Karma, and Credit Karma has been telling them they're fine, and then they go to a mortgage lender, and the mortgage lender's like, not so fine,
not so much. Let's work on this. So when they do come to you, and they've got some stuff, what is it that you do? Okay, we take out the 25% of the illegal stuff that can't be on there, right, or whatever.
In general, it can be as low as 15%. In some cases, it can be like 40 or 50.
They just say that, don't quote me that I said every time it's 25%. We talk in generalities here.
Yeah.
But when you pull some of that out, what else? You mentioned the work that the consumer has to do. What do I have to do to get better, to make my credit score go up so I can go out and buy a house this
Be the leader you know you can be. Build your professional network and access education that takes you where you want to go. We are women of all ages and backgrounds. You deserve national recognition and opportunities to build relationships with people you want to work and grow with. Hit the ground running with the Charisma chapter of the American Business Women's Association. Meetings each month from 6 to 8:30 p.m. on the fourth Tuesday in Farmers Branch, Texas, and online. Come with us. Experience ABWA for yourself. Go to charisma.abwa.org to learn more.
What do I have to do to get better, to make my credit score go up so I can go out and buy a house this year?
Sure. Right. So it really just depends, right? So each client is different, so we create a customized plan for each one of those clients. So it's different. I couldn't really kind of generalize and say, okay, well, this is what you would, because we don't, and clients always ask me that. They're like, well, so how long is it going to take? I'm like, well, let's
I don't know.
and take a look. We can talk about that. But so, it really just depends on the client, and what they've got going on. In a vast majority of cases, the deletions from the illegal entries is not going to cut it. Sometimes it does, but there's going to have to be, more work involved, and the client typically has to be involved in the process. So the way most companies work is pay me. It's going to all be better. Promise, right? You pay them and then it's not better. Right.
Right.
For us, it's like we create a plan. We have a design for that plan. We do the heavy lifting on our side. Of course, we know what works on our side. So we do the heavy lifting with documentation. With kind of the grunt work of everything. Mm-hmm. But then we have conference calls with our clients every 60 days, 45 days or 60 days to check in, pull mortgage scores and say, hey, this is what we need to do now. Right. And so generally, we want them to pay down their credit cards because they almost all have too much on their credit cards.
Yeah.
As I mentioned, sometimes restructuring debt makes sense. A lot of student loan debt is out there. And a lot of times when they have student loan debt, they have like 15 different accounts. And they've been on some kind of student loan deferment for a while. So they took it out for X dollars, but they owe much higher than that. The mortgage score doesn't like that you have 15 accounts that you're upside down on. So sometimes restructuring that gives us a boost in score.
Okay.
Sometimes, we have to settle items. There's a lot of debt that's going to meet the legal requirements to be there, depending on how severe the situation is. Sometimes it makes sense to settle. You'll hear, especially credit repair companies, talk about never settle debt. And I have a YouTube channel, and I disagree with that wholeheartedly. Yeah. It depends, right? If we've done our due diligence, it meets the legal requirements to be there. You owe the money, and it's stopping us from getting to the next spot. We might want to consider that. Now, we're not going to throw a bunch of money at collection agencies, third parties that buy this debt off. I'm not a fan of that. It is the way the system works, but settling does make sense sometimes. Even settling sometimes makes sense on charge-offs. It really just kind of depends upon, what they've got going on. The way I look at it is we get to the finish line, right?
Yeah.
Whatever it takes, it takes,
and I think that's what it is. It is to a point where I can't pay rent anymore. My family's too big for a 2-bedroom apartment. I can't afford that third bedroom unless I need. How do I get out from under what I've buried myself? Right. And how do I make it better? And sometimes it is just pay off the credit card. Don't go out to eat 3 times a week or whatever, we see all that stuff all the time. Right.
Right.
Where are you spending your money? Well, put the credit card away, cut them up, those sorts of things.
Or at least create a budget, at least know what's going on. That's the thing that always shocks me is that, a vast majority of Americans don't have a budget. They don't know what's going in, what's coming out. If they overspent for the month, they don't know, okay, well, here's my goal for the month. And, I messed that up badly this month, but here's how I'm going to make it up in the next month. Like they don't have a plan,
right?
Which is pretty normal. I mean, most people aren't financially oriented. I've went to school for finance. I love economic everything. I watch the markets all day. I love talking about this stuff. It's truly my passion. It's truly who I am, which is why I started, this type of company, because I was like, I like this stuff. I was, been the credit guru in my circles before I started this company. I also recently started another company on the business side of things for business credit and business funding. But most people aren't going to be geared towards, first of all, having a comprehensive understanding of how it all works, but then, wanting to sit down to spreadsheets and create a budget and track that every month. Right. So,
Yeah.
you know,
It's scary. It's often ugly.
right.
It's exposing.
Boring. It's boring. Who
It's
wants to look at who
boring.
wants to look at a bunch of numbers on a spreadsheet? So luckily for me, I enjoy that stuff.
Yeah. So that's why, because you know what? I learned early on, I hire bookkeepers and I hire CPAs, and because I don't like any of that. It makes me sweat. And so,
Right.
but you've got to hire, there are people that like to do that. There are
Right.
people that like to look at numbers and understand them in a better way than my Credit Karma says I have this. And so I'll just pay off all my credit cards and then I'll do that. There's more to it. There's more to it. Is this the year that you're going to stop paying rent? Is this the year that you are going to finally purchase your own home? But where do you start? How do you get your questions answered? Well, I'm Robin McCoy, and I'm a Texas realtor with Keller Williams. Relax, I got this. I have a home buyers masterclass the first Saturday of every month, and it's free to you, and it's all online. Just text the word masterclass to 214-226-3770, and we'll get you registered and on the path to home ownership. There are people that like to look at numbers and understand them in a better way than my Credit Karma says I have this. And so I'll just pay off all my credit cards and then I'll do that. There's more to it. There's more to it.
Right. And remember, Credit Karma, just while we're talking about it, it's not free. People think it's free. They're marketing to you, right? They're selling their information. They're marketing to you. Their goal is to get you to click on something and try to apply, and hopefully it works out. Right. There's actually, litigation right now about, they're being sued by the federal government for kind of, deceptive marketing, because they keep telling people they're ready for stuff, but they're not. They're just saying that go try, just try to apply. And
then that kind of, because then that something else is, there's another ad on their page, or there's something else that everything you click on, whoever's behind Credit Karma is getting a check.
Absolutely.
So,
you bet they are. Yeah, you bet they are. There's better services out there. We use a service called Smart Credit. Depending upon, the client, we use a system called Smart Credit. There's also a system through FICO, which I really like. It's called My FICO. That will actually give you your mortgage score, the same score that the lender pulls. So there's better systems out there.
Yeah. Well, so so when does somebody come to you? When does somebody call Justin and ask for help?
So typically, before COVID, 99% of our business came directly through lenders. We work with some pretty big lenders in the Dallas area. Work with, Supreme Lending and, Fairway Mortgage and Cross Country and, all of those, right? So most of our business would come in via lenders, but then when COVID hit, everything changed.
Everything got weird.
Everything got weird. So we did stuff like this, right? We started started marketing directly to the consumer. So if they come in, they find us on the internet, they find us on YouTube. We have some relationships with other people on YouTube that we do stuff with. So they come in that way, right? So if they just come in and they don't have a realtor or a lender attached to them, that's a different type of process. But for my clients that are trying to buy, that are personal referrals, I actually manage those clients myself, right? I deal with, kind of the, all the customer service that goes with that, for my lending clients. That situation is a lot different because you send a client to a lender, the lender sends the client to me. So now we're a team, right? And we've all got to kind of be on the same page as to the expectations as to what this looks like. So it's a different kind of a thing as opposed to, a client that comes in, via the internet who's like, yeah, it's time for me to work on my credit. I don't really have any goals at the moment, but you know what I'm saying? So when they come in through our system. I know the lenders that they're attached to. Usually my team will reach out to at least schedule a call with me. And then, I'll talk to the client. Usually I talk to the lender and the realtor. I kind of get an idea of what's going on and then, see if we can't figure that out for the client.
Yeah.
And if there's not an option to make that work, then we'll just gracefully, tell the client, hey, look, it doesn't look like this is going to be the best option for you right now, but hey, let's do this, this, and this, and then we'll revisit here in a couple of months. So we don't take on clients we can't help. We don't,
Right.
in this space.
Because there's a lot of companies out there that say, like you've mentioned, let's fix your credit. Let's repair your credit. Let's do
Give me your
this.
money. Give me your
And they
money.
give me money.
Yeah.
And then you leave that, you gave them a bunch of money that obviously you could ill afford to give them. And you're still in the same place you were 6 months before. And I
Right.
think it's important to note that there are legitimate, honest people out there that can help you with your credit. And it's not just a matter of, let me pay off my credit card debt.
Right. Well, and it's not just a matter of just disputing stuff, right? So,
Yeah.
certainly there's a methodical way to go about trying to clear up illegal entries on a credit profile, but that's usually as far as the companies get. And do they do that very well? And most what I've seen is not really, right?
Yeah.
So usually it takes more than, just that activity. You're only going to get so far with that, right?
Yeah.
Right. And, if your average is 20-25% negative items come off your credit, which ones are going to come off your credit? Well, we have a pretty good idea because we know the pathway for certain collection agencies and how to get things done. But the way it's listed on your credit report, what's newer, what's older, what's the amount of the debt, just because you get a couple things knocked off doesn't mean that,
But it's perfect now.
Game over. Now we're done. I mean, it may not even matter. That stuff may be so old that it doesn't even matter. So, it takes more strategy to get people to the finish line. Now, sometimes we get, sometimes it's a very quick turnaround. We're like, wow, we just gave them a to-do list. We did our thing. And then 2 months later, they're ready to roll. Right.
Right.
But for the most part, there's nothing that's straightforward about this industry. It's tough. It's a tough industry. You're dealing with credit bureaus, you're dealing with creditors, you're dealing with collection agencies, you're dealing with, clients, you just got a lot of moving parts. And it's not, there's not a magic wand that you can just,
there's not a magic wand. I hate that part.
Well, but these companies represent it like they've got the secret sauce, right?
Yeah.
They've got the secret magical, and I'm like, no, you don't.
No, you don't. And I think that's what's,
I've been doing this a long time. You don't.
If there was a magic wand to this, I would have found it by now.
Well, there's not. That's the thing. I mean, so, you can, these companies will represent themselves like they're somehow, and if you were to dig into all their client base and who's actually satisfied, I bet you'd find something, very different. So, by law, you're not supposed to advertise like that. You're not supposed to, make guarantees and, oversell your services. And, we are very careful not to step outside the law.
Yeah.
So, we're licensed and registered with the state, we're bonded. You'd be surprised how many people even in the local market in the Dallas area that, and I've looked them up because I know I haven't done it in a long time, but I used to, because I would look up my competition, people that were in like realtor offices and stuff. And I'm like, you're not even like legal. Like you don't even have a real company as far as the state is concerned.
Wow.
Yeah. So you can go to the Secretary of State. If you were to search my name or my company's name, you're going to see me pop up. I'm current, never had a complaint, because every year you have to notarize documentation, that shows that there wasn't any type of issues. Doesn't mean that, once in a while a client is unsatisfied. That happens sometimes.
That's natural. Yeah.
But we're sure to fix it, whatever that looks like. Whatever that looks like to fix the problem, we'll do that.
Well, and I think the key to this too is, so many people have issues on their credit report that lowers their score for whatever reason. So, not to be ashamed by it, but be aware of it, recognize it.
Mm-hmm.
And when it comes, when you step into that, know that you're going to have some homework. That, again, Justin's not going to go, okay, I'll take care of this, and bing, badly boobity boop, or whatever Cinderella said, does this, and then it all goes away and we skip down the path. It doesn't work that way. You're going to have some homework, and it may take, depending on who you are, it could take a month, it could take 3 months, it could take a year. It all depends on who you are.
Yeah.
There's no real, I don't know the right word, but it's going to take some time, and everybody is different. So no matter what happened with your brother's sister's cousin or your brother's girlfriend or your Uncle Bob, you are going to be different. And it's important to recognize that difference.
Absolutely. Everybody's credit profile is different. The data is different, right? So it really just depends. I mean, a client who's 10 points away from qualification is different than a client who's 110 points away,
Yeah.
right? Client
Nobody likes the "it depends," and I use that phrase all the time. Well, what about
it
this?
really
Well, that
does.
depends.
It really does depend, right?
It really does.
It also depends on what's in your credit. I can tell you right
Yeah.
now that if you've got a Capital One charge off, you're not getting that removed off your credit, and likely you're going to get sued, right? So, I
Okay.
mean, there's creditors all have their own little personalities. The bureaus have their own personalities. The collection agencies all have their own personalities. Then you've got the client who's got their own personality, and the lender and the realtor.
Sure, there's a lot. When you said before a lot of moving parts, you really mean a lot of moving personalities.
Right. But there's not a one size fits all, for
No.
any specific situation. But I can tell you, we generally have somebody who's close, right? Somebody who was in contract and just fell out because something happened. Or is very close and the lender's banged on the file as much as they can. They've done their what simulators, they can't figure it out. They're like, hey, Justin, help me with this. What do we do with this client? So those are your close people. Then you got your mid people, which they'll get there, within 6 months usually, right? Your mid people. And then you've got your people that are really far gone, right? And the really far gone people, usually they had like an issue last year, right? So they had serious financial trouble last year, and now they're just trying to get to basic qualification for FHA. But the problem is that the mortgage score looks back the last 24 months, and they look for financial problems. The whole scoring algorithm on the mortgage score side of things is supposed to be telling as to the ability of a borrower to pay back money in the next 2 years, 24 months, and not be 90 days late. So when you've hit that 90-day late trigger in the last 24 months, that look back period, the mortgage score is going to be throttled down, right? So can you get past that? You can, but the growth is slower, right? It's slower. There's some ways to kind of expedite that a little bit, but it's tough. It's tough.
Well, and just knowing that, right? So, I'm that person. I had some troubles. I'm back, I'm back on track, and yet I've still got to overcome what happened. But it's also very good to know that says, you know what, do this and don't get a 90-day late in the next year or 2 years, and things start to get better. It's just not going to happen overnight.
That's right. It's not. Yeah. And I mean, there's some things, like I said, there's some things that you can do to expedite that. Sometimes you can add credit to kind of ramp up score a little bit and make your ratios look better. Yeah. In some cases, some of the negative stuff, we can get removed based on illegality. So there's some things you can do, to kind of expedite that process.
Yeah.
But in general, if you've recently had a massive amount of financial turmoil and you're in the throes of it, like it's been 3 or 4 months, your scores are going to be pretty low. In fact, I can look when I see somebody's score before I even look at the report, I already know what it's going to look like. When a lender sends me a 520, I know they just got through some serious, massive problems, right?
Yeah.
And they're over the top of that, right? They're coming out of that 520, 530. If they're below 520, 500 or below that, I know they're currently not paying their bills.
Yeah.
They're currently not paying their bills. Yeah.
They're in the throes.
They got some liquidity issues.
Yeah.
Right? Which we can't really help with, right? Because you need extra money, so we can't really help with that. And then you got your 550s and 580s. All those credit scores come with, very unique characteristics on the credit profile, and they're very similar. So, if I was going to say people were similar, I would say if you give me a mortgage score, I can probably tell you what's on the report pretty close. what the risk looks like on their credit report.
Yeah. So, all right. Well, I do want to share that you have got a very robust YouTube channel. So that he's got a ton of information answering the question. And so we're going to have all of that and all your contact information, obviously, in the show notes. But I really highly recommend you go follow Justin on YouTube so that you can get some of these general questions answered in your head. So you're not listening to Uncle Bob. And no offense to all the Uncle Bobs out there, but
Uncle Bob may or may not know what he's talking about.
He may or may not. We don't know.
Right. We don't know Uncle Bob.
We don't know. So we've talked about like a lot of stuff today. What is one thing that maybe we didn't touch on that you would just like to get across to anybody that's listening?
I mean, really, if you're a lender or a realtor, it's good to be tied to a credit consultant, right? Because you're going to run across problems that you're not going to be able to solve. It's not your specialty, right? Robin, your specialty is selling homes. Lenders are their specialty is getting people through underwriting and getting people closed. But when it's a credit issue that's beyond what they can deal with, they either deny you or they pass it on to somebody who knows how to deal with that, right?
Yeah.
So, and if you're a client who is, considering buying or just feel like the timing is right to take a look, my company does offer a complimentary credit analysis, where we can just develop a plan and talk about, what's needed, whether it's that you're got serious financial or serious credit issues, or you're somewhere in the middle and you want to get better, or maybe a lot of our clients are actually pretty dang good. They have good scores, but they're like, I really want to get to 700. I'm at 690. How do I get there? So we can help with all of those.
Because that changes interest rates, right? 690 to 710. It's going to change your interest rate.
It will, but
Probably.
you'd be surprised. Sometimes they're like at a 730 and they want to get to a 740. And I'm like, your interest rate is going to pretty much stay the same at that point. I mean,
then it's just about competition with their buddies or something at that point.
Well, and a lot of times what clients think is they think that the mortgage score goes up to 850, like the other scores. Some of the other scores can go up to 900, but it doesn't, the mortgage scores have too much to talk about in this time right now. But getting above an 800 credit score is very rare. You rarely see that. It doesn't, the top threshold is barely over 800. So, having above a 700, mortgage score is actually a really good score on the mortgage score side of things.
All right, everybody. So everybody that's trying to go fight and get in competition with the guy next door or your brother or your cousin, just calm down. Relax. All right. Well, thank you, Justin, for joining us today. I think we've got some good information here and something to work with. And folks, thank you for tuning in to another episode of Relax, I Got This. Remember, we talk all things about real estate and help you get to that closing table if that's what you're looking for. So hit that subscribe button so you never miss the next conversation. Thanks, and we'll see you next time.
Thanks for joining us for Relax, I Got This with Texas Realtor Robin McCoy. Check out all the show notes for contact information on Robin and our guests and to access your free buyer and seller guides. Also, don't forget to hit that subscribe button so you never miss a conversation. Thanks again, and we'll see you next time on Relax, I Got This with Robin McCoy.